I'm a global macro investor. And what I learned through my experiences is some of the times that I was surprised is because things didn't happen in my lifetime, but I found out they happened in the past in history. So the three big forces that really drew me attention to studying the rises and declines of reserve currencies and empires were first, the amount of debt creation and the amount of money creation and the whole impact of debt and money on the economy. The magnitudes are unprecedented, except you have to go back to the 30 to 45 period, and happened many times in history. The second is the amount of internal conflict, particularly the development of populism on both extreme due to the largest wealth and values gaps that we have. And a populist is an individual who will fight and win at all cost, including the system. So I never saw that before, and I needed to go back. I knew it existed in the 30 to 45 period, needed to go back and study it. The third force, of course, is the great power conflict internationally. You know, we had our world order began in 1945 at the end of World War II. Then there's a new way of doing things. The United States was the dominant world power, had 50% of world GDP, 80% of the world's money, gold was money then, and had a monopoly. So they determined how things would go pretty much. And then, of course, now we have the great power conflicts and so on. So those three things, last time they happened, 1930 to 45 period, I wanted to go study them in the past. In doing that study over the last 500 years, I have a fabulous research team that can do this. And doing it over the 500 years, I saw that two other things popped. Maybe more important, or comparably important, was acts of nature, droughts, floods, and pandemics. So climate became the big issue. And of course, climate is a big force of our time because no matter what is done or not done, it's going to be very costly. So it's certainly an economic issue. And then number 5 was technology, the changes in technology. So those 5 forces I saw, and I realized how they interrelate with each other to create this big arc. And so it's like watching the movie happen over this. I like to explain the mechanics of how it works so that we understand one man's debts are another man's assets. That means interest rates have got to be high enough that they're a good return for the creditor without being so high that they're bad for the debtor. And so you see these swings and cycles in which it's great for one time for the debtor and vice versa. So we went into an insanely free money environment in which interest rates were nil and real interest rates, bond yields, went to minus 1.7%. Okay, so which side is it good for? Okay,
yeah.
Okay. And then we go through this other swing, an insane swing. All through this, we've increased our debt to GDP. What we did is we particularly transferred, the government got into a lot of debt so that they could write a lot of checks for a lot of things, okay? So what happens is as debts rise relative to incomes that are supposed to support the debt, it becomes a more and more difficult balance. So we've reached the point, we are reaching the point in a classic debt cycle, you reach the point that you have to borrow to service your debt. You know, like the different countries, Singapore is a good example. 20% of their expenditures, for the government expenditures, come from what they earn in the financial part of their balance sheet.
Right.
Well, there's the other side of that of what you have to pay debt. Okay. And then there's that acceleration. So we're very close to that acceleration in which it becomes compounded. I won't spend too much time, but the classic signs are when the central banks lose a lot of money. So what happened is they bought all the bonds because there was a supply-demand imbalance. In other words, there were not enough buyers.
Yeah.
So they came in and bought on. So they messed up the market, the free market, to keep rates there.
Yeah.
And now they're owning all the bonds. Banks bought all the bonds. Japanese bought bonds. Everybody bought bonds. They have a lot of bonds. They're losing money on the bonds. Everybody's, okay. What it means is that all markets are driven off of the treasury market. All credit markets, all equity markets, everything is priced off of that curve. So now we'll go back to basics of that. What is the inflation rate going to be, estimated inflation rate? And people have their different guesses. Probably between 3 and 4%. Okay. Let's call it 3.5, whatever the number is. You're going to need a real interest rate that's going to be in the vicinity of 1.5 or 2%. You can't go back to the other they haven't.
So now you're talking 5.5.
So you're talking in that order of neighborhood, 5.5. There's nothing precise about that. And so now you have an interest rate that is in that vicinity if you have a normal supply-demand issue. We may have a supply-demand imbalance. We're going to be dealing with that because there will be still big deficits. The world needs big spending. There's going to be big spending. And that means you have to sell bonds. And the world is overloaded in bonds. And so we have that dynamic. So I don't believe that you're going to see any material interest rate decline. A lot is being made of the blip down. The bond yield went from 1.7% to 5%. And has then come down to 4.5-ish. Now, when you're looking at, let's say, equity markets, and they could be private or public equity markets, and you're looking at the premium that they usually should have above that, you don't have much premium above that. At the same time, you're having this technological changes that are big technological changes. And so the question has to do with, what their impact is on earnings. You have to look at company by company and industry by industry, and also geography by geography, because there's such a bias to talk about the American markets, okay? I think we can all see that we have irreconcilable differences by sides that's what I mean by populism, irreconcilable difference by sides that will not accept losing. And so you're seeing an emergence of, should the Supreme Court matter, and you put people in jail and all of this kind of extremism. So one side can't beat the other, and no good government, no good society exists with this kind of fighting, and this is not good governance. This has big implications. It has big economic and tax implications and money implications. Who do you get the money for? So this is something that people will fight over in their various ways if it's not resolved. What we need is a very strong middle. There are two scenarios that I have that'll produce a lot of problems. So we're now entering a different dynamic, and the question is, do we change and beneath the surface, there are people who are very effective working, moderate people, practical people, because we're also going to need reforms. Okay, we have to reform the system in a lot of ways to make sure it's great for most people, and that's a whole other. I've been going to China since 1984, and they didn't have money, and I didn't go for money. I went for curiosity at first, and then the relationships, and I've been involved all the way through that. And when I went there last March, we were really on the brink of war, irreconcilable differences. And certain things have happened since then. The fear of that, the devastation that could be if you had a bad economic war, sanctions getting past a certain point and the like, would be devastating on the world economy. That became real. And then the issue of military war became, so they couldn't even talk. And that lent itself to stepping back. And so it was in preparation for the APEC agreement that a lot of work was done and things were done. So there's a stepping back from that kind of war. There is more like a Chinese war, the nonviolent war, that is the war behind it, like The Art of War. The book of The Art of War describes it well, but it's through their history. They basically believe that if you go to a military war, you weren't smart enough to win without going to a military war. And so the conflict is more like an intense competition, okay? A no rules kind of intense competition. It's part of the policy of this new type of competition. The United States is exerting its various powers in that sort of way. And this, by the way, was very similar to prior to World War II. We embargoed oil. We prevented oil from going to Japan before, and we froze their assets. In the United States, as they're thinking, chips are like oil. So as there's that competition, that's certainly the case. It's a reality. It's that kind of struggle. And then there was a worry, would you get sanctions on, the bonds that they own and so on. So it's that kind of war that's
not going away.
The technology war isn't going away, and how far it passes will be constant tension in terms of the negotiation. But I think that there's been an important stepping back from the worst kind of war.
Yeah.
I found Like 25 years ago, I started writing down my principles in words, and then they became encoded in algorithms. We built systems, computerized decision-making systems, and there was a great power, and I've watched the whole arc of this, and I know the power. It is stupid. It is archaic for people to think that decision-making just in their heads is going to be good. There has to be a partnership between what's in your heads and what the computer does, because it's so much powerful in so many other ways. So I think it's part of the whole evolutionary process. You know, it wasn't that long ago in a historical sense that we were in the agricultural era, and people were like oxen. That was their whole purpose. They would dig. And then our physical was replaced. We had the Industrial Revolution. Well, basically higher and higher, and our intellects are being. Now it's going to take a partnership between those two things, in my opinion, to create this great leap forward. Then in terms of investing, you think, okay, where do you invest? There's a temptation to invest in those companies that are making the technologies, which is understandable. But the biggest effect are going to be on those who use it well. Right? They're the ones who are going to create the transformations, probably, that I would assume almost all of the people here in the room are knowing about or getting exposed. The whole thing of all of these together is all dependent on how we are with each other. Are we going to create rules? Are we going to fight over the money? Are we going to fight over the values?
You're saying leadership.
And the people. The people select who we choose. That's why I come back to this basic notion that you need to be in it together. You need to be civil.
Yeah.
Then if we look at the places, you started with the question of Abu Dhabi, and I refer to Singapore. And so when I look back at this global setting, I'm looking at, okay, what are the places that are financially sound and work well together, raise their kids to be civil and all of that.
Yeah.
Again, don't use too much a U.S.-based focus. Sometimes Americans can make the mistake of thinking about the we is the United States rather than realizing that we is very different we's around the world. In the world today, there are bright spots. There are the places where they're earning more than they're spending. They have good income statements and balance sheets. They have a culture in which there's excellent education for most people. There's civility. So in this world, changing world order, the GCC states have to be paid attention to. They are the Renaissance states, as well as Singapore, for example. What Singapore represents for the same reason in the Far East. Singapore is a hub for that region, which is a hot region. So the world is changing, and this is one of the places